Hey everyone, welcome. Good morning, my friends. I'm glad you're here this morning. Welcome to today's ad-free live stream. Now, if you're here for the first time, my name is Tyler and I'm here to help navigate you through the wild world of day trading futures. Now, during these live streams, I'm going to be breaking down live price action. I'm going to be sharing my daily bias as far as where price may go today or throughout the week, and also give you real-time trades to give you a front row seat to all the action, no fluff, just the good stuff. Now, if you're watching after the stream, you can jump right down to the key moments by selecting the chapter markers below, where you'll find all the trades that I've taken along with detailed explanations, so you can learn exactly what I was thinking and why. Lastly, today's the last day for the 80% off on Apex, which I provide a code DTJ to get 80% off your funded futures that you may be starting to want to jump into. So if you want to get into that, you can so do using the code DTJ. 80% off today, last day, and then it's $85 instead of $160 to go from passing your eval account to getting your funded account. It's only $85, which is half the price. Pretty big deal. So use the code DTJ. And with that, let's go ahead, open in prayer. Let's get rocking and rolling for this morning, and we'll do a higher time frame analysis. So Father, we just invite you into our trading today. Father, we thank you that you have given us the ability to produce wealth. And Father, we honor you in our trading today. Father, watch over us. Watch over every trader here this morning. Bless this time. In Jesus' name, amen. All right, here we go. Let's get rocking and rolling here. Okay. Today is the first of the week. We have non-farm payroll that's going to be showing up at the end of the week this Friday. So when we have non-farm payroll on a Friday, according to the great ICT, we take trades on Monday. So we'll be taking trades on Monday. Now, due to last week, had a loss on Friday, we're going to be going half size. So I'm going to start smaller in size, build confidence back up, make sure I know that I'm reading the market, not continue to purge my balance or my P&L account. We don't want to do that. So we want to build that confidence back up and get to the point where we feel confidence and start sizing up. We'll also size up on the trades that are in line with the bias that we feel for today, and then we will even downsize more if we decide to take trades against that bias. Now, I put a post out on Saturday, I believe, apologizing to those of you that have been live streaming with me and watching the trades that I've been taking. I feel a greater responsibility and expectation to make sure that I'm not just flippantly making trades. I think that's wrong that I do that, especially if I'm doing it live in front of other people. I want to teach, educate, help improve your own trading skills, and I need to make sure that I'm advising you in the right way. With that being said, let's take a look at what the market has been doing here this morning. If we go to a higher time frame, we go to a daily bias. I've marked out a few things already. We have this weekly volume imbalance, or if we go to the weekly, we have a weekly volume imbalance sitting right above the weekly BISI. So I think this is our first potential draw on liquidity. I want to see price move lower. That's really where I'm looking for price to move to. That's going to be my first target. Now, below this is the weekly BISI, and there's equal lows down here. So I really like that as well, but I'm using this as my first area of interest in case we may want to continue higher, which that's a real possibility. So dropping down to the daily time frame, we have a volume imbalance here and here. We are inside this volume imbalance sitting right here, and we do have these equal lows. So this is those equal lows I'm talking about that are sitting right above this BISI. Very attractive. It is very attractive. We'll see what price wants to do here. But we are in a higher time frame push higher. Now, what did we hit? We hit a weekly and a daily fair value gap, which look what happened after we hit that. We start moving the other direction. So this is what's giving me my bias as far as today. I would like to see a trade to the downside. If a long is going to be taken, it's going to be a very short trade. It's going to be short-lived, and it's going to be lower in size because I'm going to trade into my bias on what I think is going to happen. Dropping down to the 4-hour here, we have a 4-hour fair value gap that we have not filled. We rejected it, we left a piece of it open, and we went the other direction. This is very common, okay? Very common that a partial portion of a fair value gap is left open to indicate we're moving the other direction. We're inside of a 4-hour fair value gap that we've rejected right here. We've left a portion of that open, and we have really no 4-hour inefficiencies left in this run. Just this swing high that's sitting right here. Dropping down to the 1-hour. We have our midnight open sitting right here. I like this midnight open where it's sitting at. And we'll see where 930 price is going to show us here in about 3 minutes. But we've dropped quite a bit. We've hit the last 1-hour fair value gap sitting right here. And we've retraced. Now, how much are we going to retrace? I don't know. I'm trying to figure out what my narrative is going to be if price is going to want to try to manipulate retail traders into some direction. So that's what we're here to figure out. And I don't think we're going to figure it out until after 9:30 once I see what happens at the opening price here in 3 minutes. Dropping down to the 5-minute. We have a 15-minute and a 5-minute right here with our new week opening gap sitting right above where price is right now. The 5-minute has closed, or that's pretty close. Let's take a closer look. The low of this candle is 178, and the close of this candle is 178.50. So it did close above the 5-minute fair value gap. Let's see if that indicates anything. This does look like a market maker buy model. Now we have to be careful because on a higher time frame, what have we been seeing? We've been seeing lower prices. So we could find resistance here, and we could see lower prices. I want to see what's going to happen at the opening price here in about 36 seconds. We'll also mark out our opening price, and I'll be taking my trades on my micro account, which I have all set up, and we'll see what happens here this morning. Glad you're here. Welcome. Let's have a good trading day here this morning. 9:30 opening price is marked, and our opening range gap is in discount. So this is what we're watching initially, okay? We're watching in our opening range, see if we have an opportunity. 206 to 179, 70 handles. That's a good amount. I like that. No, it's 25 handles. That's it. Now with FedPal speaking here this afternoon, we want to find our setups within the first hour of trading. So I will be done here in about an hour's time. We're not going to be going super heavy or super long because we have a Fed speaker speaking this afternoon. It's just going to get kind of convoluted. So we're going to look for our setup to happen within the first hour of our trading. Good morning, Ted. Glad you're here. Did one decent trade. Way to go. Midnight open is sitting up here. Opening range gap is filled. And minor buy side liquidity is about to be ran right there. There's minor buy side and midnight open. Looks like we're gonna have our first fair value gap sitting here in about 30 seconds. Let's see what it gives us here. Yep, filled the gap pretty quickly. So I am short biased today. I would like to see lower prices. So anything higher, if I'm gonna take a long, it's gonna be a lighter size. And as I said earlier, for those that are joining, we're gonna go light today. We ended yesterday with the weekend on Friday with 2 losses. So after a loss, size down a little bit, build confidence, go back to regular trading size. I've just learned to do that because when you have a loss, it's so easy to start second guessing yourself. And so I want to eliminate the fear of losing money and just be able to naturally read price action and see what price will give us. I really like this candle right here. It's right off of midnight open. We wicked into this fair value gap. Here's the first fair value gap. We have a small 15-minute right here that has been unfilled, that has not been touched at all. That draws my attention. Anytime I see an unfilled, untouched fair value gap, and it's right above a swing high, I think this is our initial draw on liquidity, at least to the upside for right now. Could it be higher? Absolutely. But this is what stands out to me right now. Right there. Morning, Jason. How you doing, my friend? We had buy side happen right here, and we're consolidating, which tells me we could see a little bit more of a push, or we could see a reversal. We just gotta, I don't see my model here. I don't see any one of my models. So not really any opportunity for us to do anything right now. And even if we wanted to go long off of this fair value gap, we would want to reach for discount. Discount is right here. So I would want a deeper run into this fair value gap. All right, there's the 15-minute and buy side liquidity. I'm going to draw this over here. Buy side liquidity right there. Now, let's see how this acts. We closed on the 1 minute. We still have 7 minutes on this 15-minute time frame. So we could wick higher, wick lower. It could do anything for another 7 minutes here. Dropping down to the 5-minute. We do have that 5-minute fair value gap as well in that same spot, which is fine. Let's see what it wants to do. We do have these relatively equal highs over here. This one candle obviously throws that out of question a little bit, but relatively smooth. See how they're relatively smooth? That draws my attention there. I know I had this here, but depending on how aggressive we are out of this, if we're not willing to find, if we don't slow down in price action here, then my attention goes to here. Okay, I'm going from one PD array to the next, looking at where does price want to find that resistance. Okay, now we do have a nice consolidation, an expansion. This could be the manipulation. So this could be a market maker sell model. So we're on the buy side of the sell model. Absolutely could be that. And even still, if we were to want to go long on this leg, I need to come all the way down here. I need to come back into this fair value gap and use that as my long. Why? Because I want to buy in discount, preferably inside of the leg that's expanding, creating that new leg. Okay? Now, I may not take that long off of here because we could just run this low resistance liquidity sitting right here and move lower. So I may actually use this fair value gap as my inversion model to these lows, which is the bias that I'm wanting. I'm wanting to take a short. That's my preferred bias, okay? So I'm trying to read both sides of the market and create a narrative on what may happen with price and then adjust accordingly, okay? Ooh, I forgot. I need to set up the copier. For those of you that do use Apex, today is their last day for the 80% off and $85 for passing your eval accounts and getting your funded accounts. So just FYI, if you do use that. This is also, I should remark this. I'm going to mark this more than just buy side. This is actually our London highs. This is today's London highs. Okay, so that makes this more interesting for a low here. This is not, these are not highs. So I do like that. See what happens. How was you guys this weekend? You guys have a good weekend this past 2 days. I coach my son's tackle football team. We had a win. My son got an interception for a touchdown, 2 running touchdowns, and we won 26-0. It's a great game. He was pumped. Morning, Alkai. Welcome. Glad you're here. It's good to have you. All right, so we closed below this fair value gap. Inversion model to this swing low right here. I'm not using this because we did have a nice bullish expansion, and we have this order block sitting right here. Okay. We may see continuation higher, and I just want to be careful that this does not stop an inversion play right here. Especially once we have this move here, we could see higher prices to those relatively equal highs that are sitting way over here. I'd mark those out if you guys can see those. Sitting right here. So, and on top of that, this is the primary fair value gap that I'm watching. I want to see this one be violated primarily. Okay, so this could still act as an order block to continue higher. This is how I'd use order blocks. Not a single fair value gap here that we can go long in either, which is not surprising. ERP, welcome. How you doing? That's what I'm thinking, Ted. One more push possibly. Just a sweep above these highs really is what I would like to see. I'm looking at this as a potential breaker. Okay? I'm already looking at this as a potential breaker. So I don't want to take this. I want this to sweep the highs, confirm that this is a breaker, and break lower below this level here. And that's like money in the bank right there. That's how I view that. Now, it doesn't have to come back down and make that a breaker. It could. No. ERP, I am not in a trade. We are looking for, my bias is short. I'd like to take a short. Right now, obviously, we are not going short. It's going higher. But I think that this could be a potential breaker. This is an inversion play down to the downside. We have 930 open. My higher time frame target is a weekly volume imbalance. There's our sweep. There's the sweep that I was looking for, that I was wanting to see. Nice rejection. We've got 18 seconds left on that candle. This is what, if you go on Twitter, somebody may call this a turtle soup. Watching the midpoint of that wick. That's what I'm keeping an eye on, is that midpoint. Do we come back up and test it? Do we close above it? I want to see how it reacts to that. The hard part is when you guys got to be careful when you see stuff happen like this. I'm talking about this candle and it starts going short. I can tell you internally, I'm like, you should go short now. You should go short now. You need to go short now. You have to just tell all those voices no. All right, so we have 25 seconds left. I want to see this body close below this midpoint. Okay? That's what I want to see. If it doesn't, it means we could still see some higher prices. There we go. I like to see that. Staying in the discount portion of this wick. Doesn't mean we're returning over. It just means, hey, it's telling a story. Now, if we leave from this area, we can say with confidence that we probably are moving the other direction. But we haven't left this area yet. So I can't just say, oh, it means we're going lower. This one candle closed below the midpoint of that wick. Oh, it should go lower now. No, it has to leave the area. Okay, if it doesn't leave the area, means it's not ready to tell us the full story yet. Those are those equal highs, just so we have a reference point on our screen. Three candles respecting, the body's respecting that wick. It's a good sign. But we need to leave the area. Got 10 minutes till we're in the macro time right now. This is the time that I like to see trades play out, that I prefer to take my trades. Just got to see the right setup and be patient, not rush anything. Viking, how you doing, my friend? Ooh, look at that again. We swept that high and closed low. Very interesting. I am trying a very small short right here. Looking for that push lower. My stop is going to be right above that wick that was created. This absolutely could push higher, but I'm just telling you what I'm doing at the moment. If we close above this this midpoint like I've marked out here, I'll probably close my trade prematurely. Like right there. Let's see if it wants to drop right now. Be moving my stop to break even. See if it wants to push. Sorry, I didn't realize I wasn't showing my screen. There's the trade. There's the entry. It might get stopped out of break even here. I don't know why it has 3. All right, so it wicked me out. I'm okay with a break-even trade. But as soon as this candle here showed me that we closed above this, as soon as I got my opportunity to bring my stop to break even, I did. Because that wasn't part of what I wanted to see in price action. So I'm just willing to get stopped out at break even because it's not what I wanted to see. Now, could we still drop? 100%. 100% we could still drop. But I will wait for a different type of setup. Okay? I had my narrative. I called what I wanted. I wanted it to stay below this. We did multiple times. I took a short after we swept that high. And I said, if we close above this, I'm going to probably cut my trade short. And now look at where they're dropping. So I have the right narrative. I just didn't get what I wanted to see in price. And it just stopped me out. I'm 100% okay. I just put out a video from my previous live stream talking about my break-even strategy. It prevents me from getting some of these trades, but man, how much better would you feel if this just exploded higher after you moved your stop to break even when you were trying to go short? Oh man, you would just be like, feel like you made it by the skin of your teeth. You got out, you know what I'm saying? So I really am a fan of my break-even model. It's not a model, it's just a way of viewing your trade setups. Okay, I have my narrative. It doesn't do my narrative. I move my stop to break even. Stops me out. That's fine. Okay, here's our market structure shift right here. We just ran below this low right here. We have this small fair value gap right here. This would be our potential breaker. Breaker low, fair value gap to the left, fair value gap to the right. New day opening gap on the 26th. That is worth an opportunity. Let's see if it gives it to us. Okay, there's a close. If we get a wick into here, I want to see where the body closes, but I'll probably take another opportunity here. This could push right through it, folks. I'm just saying that we have equal highs here and buy side here. So let's see how this reacts here. And that's going to determine what I'm going to do. Okay? 28 seconds. I'm willing to take it from there. My stop is going to be right above this fair value gap. So it's a tight stop loss, and I'm 100% okay with a tight stop loss. But I'm looking for this push. I'm looking for 40 ticks, 10 handles. We just swept this low right here. No, we didn't sweep that low. We made equal lows here. See if we can get that push to right here. I'm going to take 3 contracts off when we hit this low right here, which will be 20. How many handles is that? 12 at 230. 18 handles. It will be 18 handles by hitting this low right here. Okay, target number 1 hit. 2 contracts left. Moving stop to break even. Going to see if we can run to 930 price, which is sitting right down here. That's 930 price, our opening price, and then we have these equal this buy side liquidity, sell side liquidity. Sitting right here. Now, this stop I should put it above, I should keep this stop up here, but I don't want to. I should keep this stop right above this wick, above this fair value gap, but I don't want to, and I'm fine with that if it stops me out. I'm looking for I want to see it not come back up to my level and just continue lower, okay? That's what I'm looking for. Want to see this sell side ran right here. Now we also have our new week opening gap sitting. I'm just going to mark it here because it's on my other chart. On the other chart, it's sitting right here. This is our new week opening gap high and low. That's our new week opening gap high and low sitting right there. This is our very first fair value gap. Okay, we want to see this closed below. I want to see this closed below. If that can give us a close, that's going to be fantastic. I'll sell one more contract at the sell side liquidity and leave another runner here. You know what? How many? We got 20 ticks. I think I'm going to. Nope. Let's see what happens here. Stop, Tyler. Let it play out. All right, here's what I'm gonna do. I'm gonna sell one. I'm gonna let one remainder runner run. And let's see where it goes. We'll keep my stop there. Now let's see what happens. Okay. So 25 handles total so far is the max amount that I got. I have one contract left. $9.02. Excuse me, $10.02. The mistake I have made over and over, folks, is not allowing this to run. Not allowing this to run. Taking my profits too early, and then it runs for 100 handles. If we can run below this low right here, I'll move my stop to the top of this wick. I want to see us run below this wick, targeting filling this 1 minute fair value gap right here. And then I'll move my stop to the top of this wick, which, that's a total of 5 handles more. That's okay. Judas Joe, how you doing, my friend? Trades for fun. Thank you, my friend. Yes, sir. We're in a trade right now. Looking to take my last runner down to 930. And if it has some aggression, I might hold it to the low at 8 o'clock this morning. We have a low sitting down here at 20,120. So that would be an 80 handle move from where we're at right now. How long have I been trading micros? Well, it's a Friday I was trading minis. Today I'm trading micros. Friday I had a loss. After I have a loss, I want to go down to micros, cut my size in half, just to build my confidence back up that I know how to trade. Well, after today, I'm going to have that confidence back up that I know how to trade. It just was an issue of me choosing to trade on a very crappy Friday, right? Price action today is outstanding. It's beautiful. All right, so we ran that low. I'm moving my stop to this wick high. And we are up 40 handles right now. On this last contract, we are up 40 handles. Now, this could easily run it and grab this stop and then continue lower. I've seen this happen over and over again. Okay? So if we get stopped out here, I'm still confident we're going to run lower. Because I've seen that happen so often. I understand that, Joe. 100%. You want to see those equal highs ran, but it may not. Right? If we can get down, I really want to run this sell side, and I may just take my target, take my profits at that point and be happy with a 50, 60 handle move, because that's really all. I mean, 50, 60 handles. You can do a lot with 50 and 60 handles, can't you? All right, I like this little wick right here into this fair value gap. We should get a nice push lower here. See if 930 wants to get us. We're right at the new week opening gap. I like us pushing right through it. I want to see us close below these with this candle. That would actually be very nice, because leaving a fair value gap over this would be really nice. But if we reject like that, we could see prices back up here, and I may close the trade. Yeah. Let's see. If we can't close below this fair value gap right now, come on. I want to see this fair value gap closed. If we don't close this fair value gap, I'll probably close my trade. Or at minimum, I'll put it here. Yep, we didn't close it. A good chance we could come back up and hit this. So I'm going to move my stop to there, securing 25 handles again, but allowing it to potentially run if it wants to. But this rejection of 930 tells me I'm probably going to get stopped out. I hope I'm wrong. I really want to be wrong. Oh, I'm not reversing any positions, man. When I secure my profits, I'm done. All right, there's our close below the fair value gap that I just talked about. We want to see right now this sell side grabbed right here and probably running this sell side. We should run this sell side. Come on. Let's see if we get another push. If we don't, we'll take that position. I'm not going to let it. Actually, you know what? I'm going to let this run. I'm going to put this back here. Okay. If we retrace against that, if we want to continue to run lower like this, I will continue to take that. But I will take my profits there at. All right. There's profits taken. See how we ran that sell side? Target hit. Beautiful trade. That right there, my friends, is way better than this past Friday. This is what trading should look like, should feel like. It was almost effortless, other than you having to deal with your emotions on wanting to get out of the trade. I mean, that's literally all that we had to deal with, okay? This was, let's go back to the main screen here. Okay, let me show you. We hit this 15-minute fair value gap. Look at the 15-minute, and just let me guess. Look at the 15-minute where it closed, right below the 15-minute fair value gap, which is what we talked about, okay? This is the part where I said that I'm going to give you my thought process behind the trades that I take so that you know what I'm thinking and how I made that trade, okay? This is the important part. This is where learning takes place right here, okay? I marked out this 15-minute fair value gap. I said I like this fair value gap. Why? Because it was sitting above a swing high and it's been untouched from this Sunday. We wanted to wait to see what happened with the 15-minute close, drop down to the 5-minute. 5-minute respects this as well. Let's drop down now to the 1-minute. We see our high. I said right here when we were moving lower, I want to see this being treated like a breaker. Go back and watch it. If you jumped in while I was already in the trade, Watch when price was right around here. That's about 940. You'll hear me say, I want to treat this like a breaker. I want this to show me it wants to be a breaker. What happens? Price goes higher. It wicks above this high, confirming this could be a breaker if we run below it. Next thing I said, I want to see price respect this wick right here. Let me zoom in. Let me make this nice and obvious. Okay. This wick right here was the wick that ran this high. And I said, I want to see the bodies respect this. We respect it except for these three candles, but we barely go above it. I took a short here, thinking that we may see it right now. Well, it came back and stopped me at break even. And then what did we get? We got this huge drop. That's the drop I wanted and was expecting because of the signature and price I was seeing right here and anticipating this to being a breaker. Okay? Well, it stopped me out. That's fine. What happens here? We run this low right here. This low is a market structure shift. Market structure shift is different from a change in state of delivery. Okay? A market structure shift is a change in state of delivery on a higher time frame. We'll go that in another video. We run this low, confirming this to be a breaker. And then the next thing I said is I want to see it come into this level here and I'll take a short. I said I'm not going to take it on the push higher. Why? Because this could be an inversion and we may want to run higher. I said that. So as soon as I saw the rejection and we were right around here and I saw this wick with about 20 seconds left, I went short. That's where I went short. And we didn't go negative. We didn't have hardly any drawdown from that point. From the close of this candle, it never came back to our break even. Never came back to our break even. That is the trade. Now, this is what I was expecting we could see. Prices going lower. It comes back up, and then we could see a continuation lower. This is what I'm expecting, a continuation lower. That's really what I would want to see. But that is the trade we took. That was the breaker model that I teach about on my channel. It's all over. I'll go in more details in other videos on how I do that, but this, guys, is all you need. You just need to know your bias. My higher time frame bias, which I could still be holding, but that's just, I'm not there yet. I'm not in that place in my own trading. We have this volume imbalance on the weekly, and then we have these equal lows down here. This is the big move. This is the big move that I will eventually get to in my own trading where I'll be holding for something like this. This is 200 handles. Okay? ADSI. I'm proud. Hey, here's the props. The props to you, and the thing I admire about what you just did, ADSI, is your ability to follow your own rules. That's what I admire. To me, that is more valuable than getting back into a trade and making money. Okay, what did we take? We took the total move that we just made. Let's see, I got in here and I took it on the retracement. So 50 handles. We got about 50 handles is what we got on that last contract. 25 on the first. No, it's 15. No, it's 20 handles on the first, 25 on the second, or 20 on the first three, 25 on the next one, and 50 on the final. Now, I said that we want to be done trading by 10:30. That gives us 15 more minutes. I think if I have my idea of what's going to happen, at a minimum, we're going to run there. Those are equal lows. At a minimum, I think we'll go there. We could actually stop right here. There's a fair value gap that's sitting right there, but we'll see. I think we'll run these lows. And then if we want to continue lower from there, which we have the structure now to do so, consolidation, manipulation above this swing high, above the London highs, we could go all the way down to the September 23rd new week opening gap. That's where I expect. Okay. Jason, it is a good day. Now, you can have a good day with a loss if you follow your rules too. I just want to say that. It's very important to make sure we know that. Okay. Per account, I'm up $250. Those trades were copied. ERP. The hard part is I can honestly say I don't think if I did one mini contract, I would have held that the entire way. I would have been way too nervous because it would have been basically one buy and one sell. But because I was able to sell one of the contracts, multiple contracts, it gave me the peace of mind to hold for a final contract. Now you can do the same model on mini contracts. You take 5 mini contracts, you sell 3 of them after your first 15 to 20 handles, securing a large chunk, the majority of your profit, and then you hold for higher moves or for bigger moves, increasing your ability to be patient and letting price form the retracements and the continuations lower. Okay. Now this move higher, this move right here was just too big of a move for me to want to hold through. Now, it did not go above the swing high where I had that stop before, but that retracement here was 40 handles. So you have to become comfortable with and have gone through this before to be able to hold through a 40 handle retracement, a 50 handle retracement. Right now, I'm taking most of my profit at that kind of move. All my profit. I can say 99% of my trades, 95% of my trades are within 40 handles. So to see a 40 handle retracement and then for it to continue lower, that takes time to build up to that point. You're not going to get there on day one. But if you have 10 micro contracts, sell 9 of them, and then you just are determined to let it to either hit the break-even point or run for the larger target, you start building that strength that, hey, I've seen a 40 handle retracement before, I can do it again. That's how you build that strength. Now for me, I'm not at that point of holding through a 40 handle retracement. I'm more like a 20 handle retracement spot in my own personal trading on my final contracts. But I can tell you right now that the money that I made today on 5 micro contracts is more than I normally make on one mini contract, because I held for the bigger move, and trading today was just beautiful. It was just great. Judas Joe, 100%, your keyword, just so much less pressure. It is less pressure. And here's the thing with trading. You don't want to trade with pressure. You see everywhere in all the movies and everything that we see, all your movies are about, look at how he performed under pressure. I mean, you're a man if you can perform under pressure. There's traders that call other people pussies if they're not trading under pressure, if they're not taking big enough size. There's one trader in particular, I don't remember his name, but I've seen him multiple times talking about how if you're doing only a 2% risk management, you're a pussy. No. Say what you want. I don't freaking care. Yeah, you may make way more money than me at this point in time, but no. Starting out, don't do that. So micros allow you to learn with less pressure. Micros allow you to learn with less pressure. Absolutely, Joe. You can absolutely do that. You get out immediately. You just don't have especially when you're learning, and 10 handles on a mini contract is $200. Those are big numbers. I mean, you copy that on 5-10 accounts, that's $1,000, $2,000. You can live off of that, doing that daily. So when that is the frame of mind, man, I could survive off this, you get nervous. It's a lot more pressure not to want to lose that money that you potentially have made. So micros just allow you to take more off. Now, the only drawdown to micros is the commissions. I hate the commissions. Now, it's not a big deal if you only take one trade. What are the commissions? Trade of 8. Let's just look. All right, so for micros, it's 35 cents to get in and 35 cents to get out. So if you're doing 10 micros, it's costing you $3.50 to get in and $3.50 to get out. So $7 on one trade. Compared to $2.60. Okay, compared to $2.60. That is the difference in your commissions. And if you take only one trade, $7 out of 250, they're taking 2% of your profit. If you make a big trade like that. Now, if you're only making $50, that's 14% of your profits. So if you do micros, you cannot get caught up in taking small moves. The goal with the micros is you take a micro and you sell for a majority of your position and you hold for the bigger move. That is the goal. All right, so we ran these equal lows like I mentioned right here. Those are the equal lows. We pushed below those and we stopped at the last 1 minute fair value gap sitting right here. Okay. So this was the move. So my 930 price was barely midway. And you know what's interesting? Look at this retracement right here. Actually, I'm curious. We almost, if we did it from that low to that high, we almost wicked back up into the 50% level. That could have been a re-entry almost, if you understood that these equal lows were potentially the draw on liquidity. Now look how aggressive we are. This is an inversion model right here. We missed it, but this would have been an inversion model long, and I would have taken that. This will run right here to this high. Stop is at break even, and let's see if it wants to run this high right here where I have my cursor sitting. Actually, yeah, it would be this high. $15 handles. Let's see if it will stop us break even or if it will run that high. Okay, there's the high taken. 15 handles again, could have been right there. We did not get into that trade. We just weren't there in time. We were talking about micros. But there is the last trade before 10:30 when we want to be done. There it is, folks. There it is. Yep. ERP, I think you should move to micros. 100%. Judas, handshaking, no bueno. If I start sweating or if I find myself, leaning forward and my muscles are getting tight and I'm short in breath, or I'm just like, go down, 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 go down. And I get like that, you're oversized. You should not be doing anything. Look at this move. I can guarantee you the trade that I just called out right here, there will be traders that will have played that. That's the target. That's another target right there. If you took size off, if you took a TP at this high and left a runner to run, there's the trade right there. I didn't take that. I was talking about something, to be honest. If I was sitting here and I saw that, I would have taken it. No, you will not be. Joe, the only way you're withdrawing 10K is if you do that consistently. The only way you're doing that is if you do that consistently. My consistency right now on my accounts is to make anywhere from $200 to $500 per account. $200 to $500, and I do that consistently. I have never had an issue with my requests for withdrawals. Deborah, how you doing? Equal highs. Yeah, we do have those equal highs. I have the buy side. I have that buy side marked out right here. Now, I don't think, if I'm honest, Deborah, I don't think we're just going to go like that. I don't think that's going to happen. So the question then for you, Deborah, is if this is your draw on liquidity, which I'm not going to say it should be or shouldn't, okay? Because this is part of you learning as a trader, is if this is going to be my draw, what is the narrative in price action that I want to see that's going to give me the confidence to take a trade to get a small portion of that move? Okay, maybe it's this breaker right here. Maybe you want to go long on this breaker with the previous day low being ran and running higher. Maybe that's it. Maybe targeting only these small equal highs. You get a small portion of that thinking that this is your draw. It doesn't matter if you're right or wrong. You could be wrong and still make this move right here that will give you 20, 30 handles. That's all you need. So if this is your draw, what is your narrative that could tell you it's time to take a long for it? And then take 20, 30 handles of that to 150 handle move, or whatever it may be, 100 handle move. Now, if it hits liquidity, the only thing I would say is if it hits liquidity, Deborah, to me, that's telling me it wants to go lower, because we have lower sell side and there's even lower sell side over here sitting right down here at these new day opening gaps. And then we have a new week opening gap with equal lows sitting way down here. So I don't know if you're on earlier, but my bias is short. I want to take short trades. So if I'm taking a long trade, I'm looking for more of a small, lower risk, smaller sized, smaller move that will give me maybe 10 to 20 handles and then take my profit. Now I like this. Let's see, let's move it here. I like this wick right here for a lower move. Why? We wick above 50%. We wicked above this high and filled this volume and this fair value gap right here. Now I want to see if it finds resistance here or if it wants to continue. The breaker did not touch, so we couldn't have taken a trade off the breaker. No trade. But we did just grab this liquidity here. And we may want to run up. I mean, we could run up all the way to this breaker fair value gap that we took earlier. That's a possibility. Now, I think Judas Joe said I should play both sides. Technically, no, I didn't trade it, but I called it out, Joe. I called it out. It was that trade right there. Now, this is a play in itself. Not as high as probability, but if we are moving higher, this will work. An inversion fair value gap to this swing high right here. Now, the only thing, you need to wait for that to close because this isn't a bearish order block right here. and we just rejected it nicely. So now we're watching this order block right here. Does it want to reject that order block? So we have two, we're in between two order blocks. That's the bearish order block. This is a bullish order block. We swept highs, came into this order block. Do we want to respect this and continue moving higher? Or are we going to run all the way down to this bullish order block here, sweep this low, form a breaker to then go higher? All of these are options. You bet, Joe. Glad you're here. We'll see you all tomorrow or the day after. And actually, I think I'm going to call it a day as well, folks. So thanks for being here. Now, remember, last day for us to get 80% off Apex and their $85 funded account activation cost. Use the code DTJ. Hit the like button if you appreciated this commentary, if you were able to participate in some of that move. Thanks for watching, guys. I really appreciate it. Have a blessed day. We'll talk to you later.